Today, I'm here with Freddie Zwanzger, Ethereum ecosystem lead at Blockdaemon, Gaetan Thabo, head of protocols at Blockdaemon as well. And our special guest today is Mike Silagadze, founder of ether.fi. So Mike, welcome to the show. First of all, would you mind introducing yourself and then describing what led you to become the co-founder and CEO of ether.fi?
Yeah, for sure. Thanks for having me here. I'm Mike. I'm founder and CEO of ether.fi. I'll give you the quick summary. I've been in crypto for a really long time, which is to say, I bought some Bitcoin back in 2011. I read the white paper, got super excited about it, and was dabbling in the space, but was actually running my previous company that I started out of undergrad for about a decade, and switched to crypto full time in 2021 when I sold that company. And decided I was excited about what was happening with in DeFi and seeing the opportunity to actually build products in crypto rather than just speculate on token prices. And so we started as a fund, actually, as a staking fund. And so what we would do is we would take deposits, stake ETH, and then use some DeFi strategies to do boosted yields. And saw this opportunity in particular around restaking, which is this whole new emerging space, to create a next generation staking protocol. And so the fund then turned into a product which became ether.fi, which is where we are today.
And then Freddie, Gaetan, could you give us a brief description of both of your roles and what Blockdaemon does, Gaetan, and then how can that work overlap with ether.fi?
Right. So I'll start. I'm Freddie, Ethereum ecosystem lead here at Blockdaemon. So very cross-functional about anything in the Ethereum space. So I get the privilege to go deep where my colleagues mainly have to cover all the different protocols that Blockdaemon supports, which is around 50, I believe, right now. Maybe just to summarize what Blockdaemon is doing, we're an institutional Web3 service provider, basically having one integration for all crypto needs, being that nodes, index data, staking. We have an institutional wallet solution. So pretty encompassing and mainly targeted for institutional customers. And up to Gaetan to supplement anything I forgot.
So Mike, really happy to have you on the podcast. Thanks again for joining us. Formerly head of protocols for Blockdaemon, and so I help manage all our relationship and be really, at the end of the day, being a good partner, right? Is providing a really serious professional infrastructure to be able to do the link between the institutions that we talk to and the 400 plus contracted customers that we have on these institutional side, being VCs, token holders, funds, like you've mentioned, or more traditional, even banks, traditional financial institutions, and also obviously all the spectrum of Web3 users that might need super reliable, scalable, secure infrastructure. So that's kind of like the world where we operate. And my job is helping make the link between these cohorts and helping the protocols that they want to use. We're protocol agnostic. We do support over 50 protocols, but we also try to look at all the new up and coming technologies and all the new cool innovation that happens in this space. And so, I think maybe something that's really cool, for example, for the podcast is to say that Blockdaemon is going to be and is being a node operator for ether.fi. And that's kind of an example of what we can do is support cool protocols that show a lot of tractions and ambition, like ether.fi, but also a lot of professionalism. And I think that ethos, that kind of alignment in vision and how we develop the space, collectively, is definitely what bring us to and attract us to different projects. And I think ether.fi is definitely one of them. So I guess, my role with Freddie, who's much more of the subject matter expert on everything Ethereum, our role will be to help you guys connect with our platform and then ultimately with our customers and all the great resources that this can bring basically to a protocol. So I'll stop here. Super pumped to have you on the podcast. Thanks again.
And Mike, we will absolutely be diving deep into ether.fi. But Freddie, just to set the stage first, if you wouldn't mind, setting the scene, giving us an overview for the listeners of what is staking, what is liquid staking, and then what is restaking. If you could just put a level set there.
Right. I'll try my best to do it as quickly but as concise as possible. So in proof of stake, basically capital collateral is used to secure the blockchain. And that is to contrast to proof of work, for example, where the miners are using electricity to do the same for the Bitcoin network, for example, right? So basically you think capital is equal security, more capital is equal to more security. And obviously for providing that security and capital, the stakers are then incentivized by some sort of protocol rewards. Now, taking it one step further is liquid staking. Liquid staking basically is the same thing, but for the collateral that you put in, you will receive a receipt token, LST for short. And with that receipt token, you can do a lot of other things. You can put it in DeFi strategies. You can, trade it, all sorts of things. The most prominent one, obviously, on the Ethereum space is Lido, but there's also Rocket Pool and others. So those are liquid staking protocols, and they offer, for example, higher capital efficiency because the user doesn't need to have like increments of 32 ETH. They have auto compounding implemented. So certain advantages for institutions, it's usually out of reach because of the pooling of funds. That liquid staking protocols pool those funds, and then that is sort of this commingling of funds is can be a compliance problem for institutionals. Now moving on to restaking, which is yet basically another layer on top of staking or liquid staking. So basically, restaking means that you reuse your collateral that you already use for staking on Ethereum to secure other projects or protocols. And in the EigenLayer terminology, those are called AVSs, actively validated services. And basically, I mean, we're going to talk about it in this podcast. I don't want to take it all away, but basically it means for the staker, it means higher rewards for higher risks, right? Because there's new slashing conditions and things, and they depend on the AVS, and we can talk about this. But basically, that's sort of the gist of staking, liquid staking, restaking, and then maybe I'll leave it for Mike to explain the liquid restaking, which is basically the next step and combination of what I said before.
And Mike, just to double click on what Freddie said there, would you mind briefly describing, first of all, how does ether.fi work? And then also the difference for a non-specialized audience between liquid staking tokens and liquid restaking tokens.
So I guess as has been alluded to, ether.fi is a liquid staking protocol that has restaking kind of implemented at its core. And that was really the motivation for starting ether.fi, is seeing the emergence of, or believing in the emergence of this restaking category. We started working on this protocol very early on with restaking kind of at its root. And that was the reason I think we've been able to be pretty successful by launching early, because we've been working on this project for a while. So the basic idea of liquid restaking is you deposit ETH, that ETH gets pooled, validators get spun up by or through ether.fi, which then get allocated to node operators like you guys, and then a receipt token is issued to a user that they can then go and use in DeFi. So they can use it for all the stuff that people would want to use in DeFi. Like borrowing against the token, providing liquidity to exchanges to earn rewards on it, borrowing or minting stable coins against it, all that fun stuff that users like to do, taking leverage, obviously, all the fun stuff that people like to do in DeFi. So that's really what ether.fi facilitates. And then our liquid staking token, which is called EETH, that has this restaking built into it, has a lot of DeFi integrations, close to 100 at this point. So you can put it on different chains. You could integrate it with. You could put it into all kinds of exchanges and protocols, and really fun stuff that you can do with it. For some users, they really enjoy doing that. That gets very these sort of financial games are things that they like to play. But for other users, that can be very confusing, right? If you have 100 choices and you don't know which ones are safe or good, it's hard to know exactly what you should do. And so that's why we launched our second product. So we now have two products. The first one is ether.fi Stake, which is the simple liquid staking with restaking built in. The second product is ether.fi Liquid, which is an automated DeFi strategy vault. And so that, in a non-custodial way, allows the user to automate their DeFi strategies. So they mint this liquid staking token, they put it into our liquid product, and then that liquid product deploys it into DeFi and earns all kinds of great rewards for the users. We think that's great. It's seen a lot of adoption. We've had now over 330 million in deposits. It's actually now the largest DeFi strategy vault. So ether.fi is now the largest liquid restaking protocol and the largest DeFi strategy protocol. And then we have another product coming up in a few months called ether.fi Cash, which is a credit card that you can use to spend your crypto asset. And I'm confident it'll then be the largest crypto payment network. So the totality of what ether.fi is meant to provide for users, it's really more of a consumer product, which allows users to save, invest, and spend their crypto with stake, liquid, and cash. And we're pretty excited about that. We think there's a tremendous need for consumer apps in crypto, things that make it possible for people to use crypto and DeFi for normal people, not hyper sophisticated finance nerds, but normal people actually being able to participate in this this universe.
And you mentioned there are three products, two currently in market, one soon to be launched. But just give us a breakdown of what those products and ether.fi as a whole, how are they different from competing products in terms of stake and liquid in the market today, and what are some of the key differentiating points?
Yeah, so the three products are stake, liquid, and cash for staking, deploying capital, and then spending it. This isn't a thing that exists. So there's not another player like, oh, there's this other company where you can do this stuff with. In the components of it, there are alternatives. So for example, there's Lido. They're by far the largest player in the staking world, the liquid staking world. They're I think almost 10 times larger than ether.fi Stake. They've been around for years and years, but they're quite a bit larger. Actually, it's like Lido, ether.fi, and then I think it's like Binance, Rocket Pool, Coinbase. It's kind of like that's the stack. But we're a solid number two, but a distant number two. So that's the staking product. The DeFi Vault, I can make comparisons. Like Yearn is probably the one that people mostly think of when they think about DeFi strategy vaults. And they're OGs. Huge respect for those guys. They have a lot of votes, but it's not quite apples to apples because ours is it's a heterogeneous strategy vault. So it does like a whole bunch of different things, and the focus is on risk management and diversification. It's not like a single strategy vault. And then the other thing is it is insurable. So it is a full end-to-end insurable vault, which is a novel thing in crypto. So in other words, when you deploy into liquid, you can actually buy insurance. It costs about 5% a year, and it gives you full smart contract insurance on ether.fi, on EigenLayer, on every strategy. So you're fully covered for smart contract hacks, which is a pretty big deal. And I think necessary for retail and for folks that are more careful. And then cash, similarly, I guess it hasn't launched yet, but I don't know that there's a direct analogy for something that exists. Probably the closest analogy would almost be like CeFi offerings, like TradFi. If you could think of like even what some of the exchanges offer, right? They offer trading, they offer custody, there's strategy stuff, there's like earn products that they all kind of offer. A lot of them have credit cards, they're tied to the account. So that's really the alternative to ether.fi is we are an on-chain crypto native version of these CeFi products that that really have caused all these problems in crypto in the past, right? Like all the blowups, right? Like FTX, Celsius, Voyager, BlockFi, like every major blowup was a TradFi, CeFi thing in crypto that secretly re-hypothecated users' assets and did stuff in the background. With ether.fi, it gives you all the same benefits, but it is fully transparent and non-custodial.
And you mentioned they're non-custodial, totally on-chain. Freddie or Gaetan, I'd just like to get your opinion or insight into how this aligns with Blockdaemon's approach and overall footprint in the blockchain ecosystem in terms of the transparency, the focus on native restaking, and also obviously with centralized ecosystems, there's potentially a greater risk, but the risk avoidance that Blockdaemon takes with the approach that we're taking.
Right. Well, I'll take the first step maybe. I think like Gaetan alluded to in the beginning, I think basically from the value alignment, we're very close, because the risk avoidance that Mike alluded to, I think that is like super critical, particularly in these early stages of the restaking market. I saw you speaking in Denver, Mike, and mentioning the atomic bomb that you expect to go off somewhere in that ecosystem. And
that's right, that's funny.
That risk is, yeah, I know, and it's great because it's just very tangible and very, everyone can imagine that this could be a catastrophe, and it's really about the risk management to avoid it. And I guess that's where we try to help also with a due diligence selection on the AVSs that we support in terms of the restaking, but also just more generally the partners that we connect to. So that we have a lot of partners, but we're definitely not partnering with everyone, basically. So that I think is one of the main things. Like we're trying to be the adult in the room of crypto, basically, which with all the excitement sometimes also seems to be necessary to not just do all the young risk-taking things, but also someone watching a little bit that everything is there, and maybe help the industry in that way to mature and professionalize. And by doing that, by basically providing that bridge to the more conservative institutional investors and players in this space, basically, for them, obviously, also transparency is key. So I think we do see them move slowly but surely into that direction of more on-chain business. Obviously, Coinbase and Base L2 and things like that, those would be examples of moving things out into the open and into sort of the Web3 realm that have been, sort of siloed in the past. And lastly, I guess in terms of the liquid staking or restaking is also that we're very much focused on the native restaking side rather than just, repurposing LSTs. So liquid staking tokens. Number one, they're already capped on EigenLayer, obviously, but also the native restaking is sort of the more tangible and again for the institutions, the more realistic kind of scenario to get into this world. So I think those are the main parallels that I see. Yeah, Gaetan, happy to add if you have anything.
Yeah, maybe a couple of things. One is how Blockdaemon and ether.fi aligns. I think I really love your presentation and like how you simplify the terms, not saying we're a liquid restaking platform, DeFi, and saying, no, it's invest, save, spend. Everybody can understand that, So there is this effort of simplifying how you approach on-chain activities and what that technology can bring to everyday people. And I think that simplification is also something that has driven a lot of the product vision for Blockdaemon, to make one simple integration for an institution to access this like crazy complex world of blockchain. So that was kind of first point that came to mind when you mentioned that. And the second one is sort of, we've alluded to it, but the professionalization and not being afraid of doing the boring stuff, basically, like ISO certification and audits and transparency around your financials. And for example, Blockdaemon is close to being GAAP compliant on the accounting side, and like we have a financial audited every year, and we're going through another round of certification for our internal processes. We have a legal team, we have a chief compliance officer, we're a tech company. You'd be like, well, you don't necessarily need to do that, and that's true. A lot of our competitors don't, but we actually invest heavily in that boring stuff in order to ultimately, being able to align with projects that require high level of security, high level of transparency, and being a super reliable infrastructure partner, which for us, and I'll stop here, but for us, it's kind of like a stepping stone and a condition to really make the space overall grow and become a bit more professional. So yeah, I think from that perspective, our values align, our ways of working align, and we're like very good fit in that sense.
Yeah, for sure. I think it's a great partnership. I think what we hope to provide is the consumer front end and a lot of the decentralization smart contract layer, and then we need exactly folks like you guys as partners to be able to enable that with great in our case I guess node operation, but I'm sure there's other ways for us to work together, obviously on the restaking side and beyond.
And Mike, I'd like to dive into obviously huge synergies, but also the fact that your platform has experienced tremendous growth over the last year. Growing from $2 million total value locked to over $3 billion, almost exactly day for day. And so I was hoping you could give us a bit of maybe an overview into the journey of ether.fi over the last year. What are some maybe challenges? What are some of the highlights? And then what have you learned from that?
Yeah, I mean, the growth has been really crazy. I think there's a huge component of luck and timing. I think you need both. You need a really great product and good execution, which I think we've done. But we just got incredibly lucky with timing. The whole crypto market recovering, and so maybe just to take a step back. So we're I think just around 3.5 billion in TVL on within our staking product, and the liquid product that we just launched is 320, 330 million TVL, and continuing to grow really nicely. I mean, we're getting, depending on the day, between probably 20 to 80 million in new deposits every day. So I mean, it's growing really quite fast, and I think we'll actually continue to accelerate in the coming weeks. So that's where we are, and as I said, a lot of that is just driven by timing. The whole crypto world kind of lost its mind around restaking and EigenLayer. I think there's two components to that. One is just the fact that I think legitimately it is really like a net new innovation on Ethereum that opens up just a lot of design space, and so legitimately people just got very excited about that. But also crypto was like in this like bear market, and then like this was just a shiny narrative that like everything just like zeroed in on. And then there was a lot of craziness around like points and incentives and gamification that really took off. So I think it's a combination of all those things that really lit the fire under this this market, and we've just been the fortunate kind of beneficiaries of that.
And with all those factors and all of those tailwinds driving the momentum, of restaking, Freddie and Gaetan, from an institutional perspective, I'd like to get your insights into, how does Blockdaemon plan to support institutional liquidity entering into Ethereum restaking?
Yeah, happy to. I think it's, I mean, Mike is being very modest, saying it's all the market upturn, which obviously played a role, but I think, like you said, good execution and having the good product ready at the right time, that's the part where the entrepreneurial excellence shines. So, but yeah, I guess it's still early days, basically. That's the other part. I mean, you could argue in crypto, not so much anymore. We've come a long way, basically, from the early Bitcoin and even Ethereum days by now. But restaking, as Mike said, I mean, EigenLayer is not even live yet, or not. Well, they are live. You can put in collateral, but you can't restake it basically actively.
Yeah, it doesn't do anything yet.
Right, exactly. It doesn't do anything. Well, it gets people excited, and that's a lot, actually. A lot of products fail to do that, even when they are in production. So, my hope is basically that this momentum keeps going, and that all the point connoisseurs are not gonna go away chasing yield elsewhere once the airdrop or supposedly happens. Airdrop, whatever, who knows? But on the EigenLayer happens. But anyway, so back to the question, what we're doing, I think because it's early days, education is always key, particularly with the institutions that are not like day to day into crypto and all the nuances and the innovation that happens there, and basically, I don't want to say daily, but let's, at least quarterly timeframes. So education is key, and this podcast is obviously an example for that. But we also integrated restaking into our staking flow on ETH. So on the Blockdaemon app, when you stake your ETH with Blockdaemon, you can switch a toggle to restaking, and then basically we'll deploy the necessary smart contract, the eigenpod, and set it as your withdrawal address. So it's making it easy, like Gaetan was saying, and Mike, you were explaining it so nicely before. It's trying to make it easy and abstract away most of the complexity, while still giving people the transparency what they're actually opting into, right? I think that's both like two sides of the same coin, and that we're working on that. And then lastly, overall in the ecosystem, in the restaking ecosystem, we're talking to a lot of AVSs, LRTs, tooling providers, EigenLayer itself, obviously, to share those institutional perspectives, which are maybe a little bit different from some of the, retail, degen, Web3 native kind of perspectives. And by that, we try to, mature the ecosystem as a whole and help with that, basically.
I think making it easy, educating our customers, definitely like very strong points around how we can help bringing liquidity and bring these institutions into this new world and adopt that technology. I think, not to sound like a broken record, but I feel like building the toolings and the things that need to be done to be able to check all the boxes to have these institutions feel comfortable using the tech is stuff that we're trying to do, right? And I think that's kind of key of what we are trying to build, is a system that's compliant, that's safe, and ultimately live up to our reputation and make sure our branding is preserved when we stepped into new protocols and step into new spaces like restaking. And so a lot of our customers would come, and we're not a financial advisor, obviously, but they would come and say, hey, what do you think of? Like, what's your observation? What kind of research have you done? What are your takeaways on X protocol, Y protocol, Z protocol? And that kind of relationship, which is part of the education piece, but also being serious and do the due diligences that are required, before you support and jump into an ecosystem, I think is part of how we ultimately will bring that institutional liquidity and make sure that they can do that safely. And I think the last piece, which I think has been mentioned by a lot of people too, is that institutions, when it comes to restaking, will come incrementally. It's not going to come overnight. Everything will pour into it. It's going to be incremental. It's going to be slow. There's going to be trials, and over time we collectively need to gain the confidence of these institutions for them to feel safe and secure, that this is something where there is an interest and they can grow that appetite. So I think that's kind of why we're here.
Yeah, slowly and then suddenly. That always comes to my mind.
Mike, from your perspective then, when it comes to traditional institutions, what are still some of the biggest challenges for them to participate in liquid restaking?
Yeah, it depends on how traditional you get. I mean, we have, it's hard to know this for sure. I think we seem to have a lot of the more institutional adoption in the restaking space. The reason I say that is because we have a pretty active, we have active conversations with people that are looking to deploy capital into ether.fi, and so we know and have had conversations with, discussions with probably about like 30% of the ETH on our platform, maybe even a little bit more. And those loosely, let's call them institutional allocators, have, they range from, let's say, individuals that are deploying, in some cases, a few hundred ETH, all the way up to, I guess, as is that widely reported, Justin Sun deploying 500 million in ETH, and everything in between, and that includes, in some cases, liquid funds, VCs, hedge funds, honestly, pretty much any fund, including institutional folks that we talk to, will tell us like, oh, personally, I've got ETH and ether.fi, and then that usually makes the friction of getting them to deploy the capital, the fund assets, a lot lower. So so we do have this kind of like two-sided, or we have to serve both kinds of customers. There's obviously a huge amount of retail flow where people are depositing, 0.1 ETH, 1 ETH, 2 ETH, just small deposits that are just streaming in, 100 an hour, basically. And then on the other side, as I said, these more kind of institutional folks. But what we don't have, I don't even, probably not even a single one, is more traditional institutional allocators. Like the Fidelity and BlackRock aren't deploying on on ether.fi. And so that's something I think that they would certainly, I'd imagine if they were deploying with anybody, they'd go to folks like you guys and work with you. Yeah, I think there's like maybe years before they're ready to actually do anything related to DeFi, and it probably would have to be in some sort of weird sort of walled garden thing that's that's probably awful, but that's it's the only way they would do it. So that's kind of like the full landscape of the types of customers that we have. Again, to reiterate, where I think we probably have more of these institutional-ish than others, we still don't really have any like legit pension funds deploying ETH and ether.fi at this stage.
But I think, I mean, even that is a great testament of what fascinates me about crypto, right? Because you have those retail people with 0.1 ETH, and you have those others that have like thousands of ETH.
Yeah, it's democratized.
Doing side by side.
Exactly. Same access. There's no privileged things, special terms for like the big, the big whales. In fact, in most ways, the season 1 airdrop that we did strongly favored smaller depositors. So it's great. I think that's the beautiful thing about crypto.
Right. And so I like that too. And maybe to shed some light on that, very end of your scale, basically, in terms of the very traditional institutions, I think you're right. This is probably going to take years on the timeline, because some of those are just getting familiar with staking. And then, up the next one is then liquid staking, and up the next one is then maybe DeFi or something. But that being said, I mean, obviously jurisdictions are different, and jurisdictional clarity is definitely a driver of institutional adoptions that we see. And if the returns and the excitement is big enough, then they'll find creative ways to go that route maybe quicker than they would usually do. I mean, we saw with the Bitcoin ETF, one of the most successful ETF launches ever, whatever is in the ETF, right? So I think that's sort of an example that we could give there. But generally, yeah, like you said, I think the general novelty of the restaking concept, it's basically, I mean, EigenLayer is a startup, and then there's other startups building on that, and then there's yet other startups, like ether.fi, and so it's very new, and so it's very risky, and obviously not regulated, and uncertainty there. So that's one thing. The transparency, I think we will get a lot more by the end of the year in terms of risk and rewards. I think that's the number one question that we get, like, what do I get into, and what do I get for doing it? And there's no real answer right now. And then the pooling of funds, depending on, like, for the more traditional institutions, that's still sort of a deal breaker, like you said. And if they go to DeFi, I personally predict that we're going to see sort of a resurrection of institutional DeFi, like those walled gardens that we've sort of, I remember Arc and things like that, early experiments. I think that's going to come back in the next couple of years. And then just different, like the boring things that Gaetan said, like just, reporting, whitelisting of operators and restakers, dividing funds from one address to multiple AVSs or node operators, things like that, sometimes surprisingly are not there yet. And then not so surprisingly, because we're just launching the first version, basically. So those are some details maybe that I'm sure they'll come. I mean, they're already talked about, so then it's just a matter of time. And I'm sure the Web3 space will be ready once the institutions are ready. So it's it's their timeline that we have.
Yeah, I mean, I think in some ways, I think people have it kind of backwards, in that I tend to think like, where are we in 5 years or 10 years? And today it's very exciting. The Bitcoin ETF launches, tons of capital floods in, and people get excited about the level of interest there. I think that is a flash in the pan, and may even be the peak. Maybe the peak is today. Maybe it's in the next year. I don't think you're going to have there's going to be a time. I don't even think it's that far into the future. Maybe it's 5 years from now, where that stuff just doesn't matter anymore. The default will be crypto. It's not going to be like, oh, how do we bridge all this TradFi stuff over? How do we create this, these rails? I like to use the analogy that maybe it's kind of gross, but if you mix shit and ice cream, you don't have ice cream anymore. It's just a bunch of shit. So that's kind of a little bit how I view trying to bridge TradFi and DeFi or permission DeFi or any of these walled garden systems. It's what's the point? You've just turned something that was good into all the same garbage that you had before. So just the default path in 5 years, I think, will be crypto native. I think you're even going to have companies that don't bother doing an IPO on NASDAQ because none of the liquidity is there. None of the buyers are there. None of the if you want something that actually opens you up to a global capital pool, you'll go crypto native. There will be crypto native securities, stocks, funds, launches. There'll be crypto native payments rails. I think eventually nation states completely lose control of their, of the ability to try and enforce. They'll basically have a choice: either go full dictatorship or accept that you no longer have control over your monetary system, that it really is sort of self-sovereign. And that, I think that actually will lead to a lot of positive changes in the world. But I think the default will be crypto relatively soon, probably sooner than people think.
I was going to add, and I was afraid for a second when you mentioned this analogy that the shit was going to be crypto. So I'm glad it's the exit.
Yeah. the crypto is the ice cream. Yeah.
Because a lot of the, when you talk to a regulator or a lawmaker, they're like, oh, crypto is the shit. They don't understand that that's the other way around.
The absurdity, as if there's this, what's all the stuff that blew up in the a year ago, in recent memory, Silicon Valley Bank, Signature, Silvergate, First Republic, FTX, all the TradFi shit blew up. All the on-chain stuff worked perfectly in the most extreme, insane, volatile conditions. Aave fucking nailed it. Beautiful. No bad debt, not a single dollar of bad debt created in the most volatile market conditions in history, really. Prices moving 50% an hour, and Uniswap, all these systems worked perfectly. The chain kept going. The systems worked beautifully to balance themselves. It's remarkable that it actually worked as smoothly as it did in these extreme market conditions. Whereas the traditional financial system is like a fucking Fabergé egg. You poke it, the whole thing blows up. So it's just absurd. And most, obviously it's a function of size, but obviously most illicit crime is conducted on the TradFi system. Right? They forgot that money laundering existed for thousands of years, and there's probably billions, trillions of dollars of illicit activity going on in TradFi, and they're, as a percentage, I'm not sure it's obviously more of a problem in crypto than in TradFi. I certainly haven't seen any real evidence that that's the case. So anyway, that's a rant. I'm preaching to the choir here.
Yeah, you seem to be very good with analogy. I'm going to try to use one as well, because I was going to make a point about, kind of the kind of opposite dynamics between legacy traditional software in the traditional world versus on-chain tech. And the inverted analogy is that on-chain tech, the longer it exists, the more reliable it becomes, and the more secure it becomes, and the more tested it is. Versus old legacy systems tend to over-complexify and becomes more and more outdated. And so there is kind of it's almost like there is Benjamin Button on one way, where you go the more you advance, the younger you become, versus the other way around. See, I don't know, I'm trying to mimic your analogy. I don't know if it's the right one.
Yeah. But I think it's driven by incentives, right? No regulator gets fired for not passing a law, right? Or I should say, lots of people get fired or get promoted and get more clout and prestige by passing lots of laws and imposing more regulations. No regulator gets to advance their career by repealing a bunch of like dumb stuff that was passed. And so it's just, you end up with like lobbyist warfare, who can get, whatever regulation, in place to benefit themselves. And it's just like this stalemate of all versus all, instead of a market-driven system where there's skin in the game, where like the actual actors in the system pay a cost if they create something that's broken.
And as we wrap up today, Mike, where can people go to find out more about ether.fi, learn more about the platform, and Freddie and Gaetan, any parting words?
Yeah, go to ether.fi, stake some ETH, and deploy into DeFi using Liquid. Try it out; it's fun. It's a good way to get started in the space.
Yeah, I think that's exactly the right way. And push all the buttons, try everything out. It's fun and you learn a lot. And particularly if you're not so familiar with the Web3 world yet, just go out, do it, or give us a call. We're happy to help as well.
And on that note, Gaetan, Freddie, Mike, thank you so much for the conversation today. Fascinating stuff. Mike, really appreciate it. So thanks for joining.